Hey guys, welcome back. In today's video, we are talking about the obvious gamma squeeze reflecting the true price, the 127% ownership, and many more in this video. First, we take a look at this. Bot accounts with posts like this makes me believe AMC isn't going anywhere near $2. The $2 max pain is likely just short sellers' attempt to trick retail into believing the share price will continue to drop to stave off AMC buying pressure. So recently we've seen an increase in people talking about AMC to go to $2 because the max pain is saying that it's $2. And if you take a look at the options currently that are available for AMC, what we're seeing is for the $2, 161,000, but more importantly, is taking a look at the options that are going for $250, $3, $350, and $4. And you can see the amount of calls that can go in the money at these prices. We have 254,000, 446,000, 508,000, 563,000. So you understand the amount of pressure that can be applied when AMC breaks above these price points. Now, when you take a look at everything that's ongoing with the box office, with what AMC is operating, none of that indicates that AMC should be seeing any declines because we've only seen nothing but good news, such as revenue breaking records, attendance breaking records, box office breaking records. So typically what these would mean would of course be the increase in the price within that industry. Now that applies to AMC and any other stock within the same industry, but the very fact they are still trying to push this narrative that because the max pain is $2, therefore AMC should go to $2 is because it feels like to me they're trying to take the attention away from what would actually happen when AMC closes above $250, when AMC closes above $3, because that is what's likely going to happen when you understand how well AMC is operating. We've seen the movies that have been released recently, we've seen the movies that will be released soon, and all of these things are an additional good news to AMC. And this is how, when we take a look at the strategies being used by the market makers, by the institutions of applying these bot accounts to try and push a false narrative, a negative narrative on AMC, is because they are aware of what would happen when AMC is going up. And they're trying their best to avoid that circumstance happening. But at the end of the day, the apes know exactly what's going on. I do think it's funny that we are seeing these posts that kind of just going around right now, because it feels like they clearly don't understand anything that's going on. Because if the max pain truly dictate where the price is going to go, then when you take a look at in the past before, why did AMC close below max pain? Why was AMC nowhere near max pain? But now that the max pain is below the current market price, they suddenly say we're going to go down. It clearly doesn't make sense, and it just goes on to what we've said. They only use these strategies when something is going wrong or to benefit themselves. And so in this case, they will benefit if AMC were to go to $2. But more importantly, they will lose a lot of money if AMC was to close above $250, if AMC was able to close above $3 because of the calls that are going in the money. Because when we take a look at the overall kind of landscape right now, Q2 2026, the best quarter in AMC's 106-year history. Q3's to date box office is the highest ever. The AMC max pain of $2 is ridiculous. Market cap will be at the same level as the considerable decline in 2019, but they will try for sure. And this is what we know in terms of where AMC's true price should be when you take into account in terms of what AMC was operating pre-COVID, how AMC is operating now. Remember, we've just had the best quarter in AMC's 106 years history. People will bring up the case of dilution. However, dilution doesn't take away from the fact that when a company is doing better than it's ever done before, it then shouldn't see any sort of benefit to tie with that. And so in this case, if we are seeing AMC doing the best quarter, and very likely potentially doing another best quarter again in Q3 and perhaps Q4, then realistically, we should only be looking at bullish projections for AMC. The very fact that we do have these bearish targets on AMC is because the shorts stand to lose billions and billions of dollars when AMC closes above $250, when AMC closes above $3, and the gamma pressure that we are going to expose onto these guys. You can see here, institutions, while saying that AMC is going to go down, while saying the max pain is $2, while saying it's going to go bankrupt still, or that there is no positive outlooks for AMC, continues to buy. and the opposite chain has gamma squeeze written all over it. It's really setting up for a blame retail, pay the apes situation. Everyone, and I mean everyone, is buying AMC. No one is selling, buying IOU, selling FTDs, no real shares exist. We can see here the institutional increase has gone up even more with 2,000% in 1 month. Now, we've already talked to you and shown you guys in terms of the recent filings that has shown how much institutional ownership there is for AMC right now. And this is something important to remember, is that this is amidst all of the constant articles, the constant news, the constant narrative that AMC has no bullish projections, AMC has no future, and more importantly, AMC going bankrupt. They're saying all of these things, yet they're buying into AMC. And what you stand to see is that none of these articles that are talking about AMC going to bankruptcy, that no one is buying AMC, is actually showing you that institutions are buying AMC and that they are buying more than ever. And I think that's the biggest takeaway point, because by now we have come to the conclusion that whether it's the market makers, the financial institutions, the short sellers, the hedge funds, or these mainstream media that are releasing these articles, they are not here to help out the retail. So the very thing they're saying, we should take a look at it and understand it as the complete opposite. So the very fact they're saying that everyone should be selling, again, look at it opposite, because that is what it is. The institutions are buying instead of selling. When they talk about AMC having no bearish or bullish projection, take a look at the opposite. It's only understanding that it is going to have bullish projections. And this is just a very good transparent showcase of it. Once again, if we take a look at some previous articles to really prove and understand this, you can see is that previously they talked about this on Bloomberg, where they said, we have learned to live without movie theaters. Even the ones that make it through the crisis may find that online streaming apps have stolen away audiences for good. So this is the article that they were talking about during COVID, where they claim that AMC will never recover. You can see here, March 2021, where they claimed that the theater industry was structurally dead and that AMC would never generate meaningful EBITDA again to service its debt. Since then, AMC has generated record-breaking adjusted EBITDA and restructured its debt, completely proving that analysis wrong. So we've already known about this. We've seen how AMC is breaking a record, just like we talked about with the best quarter ever in history, and potentially we're going to see that again for Q3 and Q4. We also have to go back to this previous article where they said that this is what they thought, that no one was going to stay even when we lived through the crisis, in which we did, but more importantly, people did stay. And the thing that we really need to talk about is how they were saying that online streaming apps have stolen away audiences for good. For those of you who've been keeping up to date with the videos, what we've seen was recently how they talked about Gen Z, the very people that they were talking about to move over into the online streaming, has talked about how actually they rather watch it in theater. So the very audience they said that was being stolen away have now come out to claim that no, actually we are staying in the theater industry. And more importantly, if you take a look at what these streaming platforms are doing, they are actually partnering with AMC. They're collaborating with AMC because they've realized is that they're not here to kind of steal AMC's audience, because they can't do so. And the way for everyone benefit is to actually come together, because they understand the reach and they understand the power that AMC has. And so this is what we said with how these articles aren't here to help you. They're here just to give you kind of the most bearish, negative sentiment they can to try and throw you off of what is actually happening. We can also see here Q3 domestic box office has never before reached $2 billion this early. Add to that considerably improved profit margins and a global scale of AMC, the world's largest movie theater chain, and you'll understand that AMC is heading towards a pretty bright future. So I think I don't need to focus on this anymore. We've seen how well the box office is doing, and we understand that the box office is only going to continue to get even bigger. The movies that have been released recently have been top quality, have encouraged more and more viewers to actually go and watch it, not just once, but multiple times, which is all adding up to the box office. And the matter that we need to focus on right now is just how efficient AMC is in terms of their operations, in terms of their infrastructures. Now, for me, that's not a worrying matter. We've already seen from Q2 in terms of how they're operating, what their structure is doing, and how efficient it's becoming, and again, how they're paying off their debt. It's just a matter of, can they improve it even more on top of that? But seeing as how the box office is doing this well, seeing it as how AMC, even if without improvement, is already operating at this standard, you can expect us to make the same, if not even more money, and of course, increase profit margins and decrease the debt that people are continuously talking about. And so the matter of what we are seeing right now is that Wall Street is pricing AMC like it's dying, but the 2026 number tells a different story. Q1 revenue beats estimate by 9.24. Q2 revenue reached 1.6 billion, up 14.2% year over year, with an EPS beat by 366%. I think this is all you need to understand in terms of where we are going. And it's why I'm extremely optimistic about Q3 and Q4. And I definitely think that right now, the reason why we've suddenly see an increase in surge of negative sentiment on AMC is because they realize how pivotal AMC will be during Q3 and Q4 when they release the results, and people will start to understand how undervalued it is, and that's when people will start getting in. And so they are worried about the true reflection of price, and that's why they're trying to push a narrative to force people to sell as much as possible. Their aim right now isn't to push AMC to bankruptcy anymore. Despite these articles that they released talking about AMC going to bankruptcy, they know that that is not possible anymore. But what they're trying to do by saying so is to perhaps push retail and apes away from AMC so that the institutions can then buy up the float as cheaply as possible and as much as possible. Because once Q3 comes, once Q4 results comes, and we go to next year and you see how it's just a massive turnaround for AMC, that's when true value is going to show, and they are trying to position themselves for that very thing. And so when we talk about AMC stock price not yet reflected our new reality, we have to understand this is just a understanding of where we are going to be seeing for the domestic box office, of what the expected is. And again, the efficiency of AMC is extremely important, because even if we don't see the projected box office being hit, even if we are at the same box office as previous years, AMC is still set to make more revenue, to make more profit, because of the efficiency. And it's why I always highlight the efficiency. And that's why it is extremely important. People who don't look at the fact of how well AMC is operating and they just look at one certain factors, I definitely think they don't have an understanding of what's going on. But this, on top of what we've just said, AMC efficiency, along with the fact that the box office is increasing, I think is already telling you a story of where AMC is going to go and why we talked about people are positioning. And so when we understand that, the fact that they are buying in, the fact that shorts are switching into long. Recently, we talked about how Citadel has increased their position in AMC by 600%. This is them talking about how they are confident about AMC's future. But just like we talked about, you don't see these mainstream media talking about it. They talked all this time about how this firm sold AMC or that person sold AMC, therefore AMC is going to fail. Therefore, AMC is going to bankruptcy. And they're still holding on to that. But yet they don't talk about when previous short sellers of AMC, like Goldman Sachs, like Citadel, who have actually increased their position of AMC by drastic size. Yet they don't talk about that. And that's just showing how they are afraid of what would happen if they were to talk any positive sentiment about AMC. Another big thing that we are seeing right here is you can see here. So what we saw was 2 weeks ago, AMC's ownership in institutional was 28% and 70% retail. The second pick was then that institutions owning 50% when retail owns 70%. That equals 127% owned. So that means we are at 127% owned for AMC. Now, clearly that shouldn't be possible, but we know that, of course, synthetics exist. And I think this is just another mess up of the system. This is just another showcase of the synthetics. But even though we are seeing 127%, I definitely believe that the real number is way higher than that. And to me, the fact that they are trying to say that institutions were able to go from 28% to 57%, meaning that the percentage that they've bought, the increase of 29% that they've bought, have to have come from retail. So they're telling me that in 2 weeks' time, when AMC has released nothing but good news, the apes who have held for 5 years suddenly decide to offload 27% or sorry, 29% away to these institutions. That doesn't add up to me. There is no way the apes who have held on for this long, after seeing major news for AMC, decide to sell 29% of their shares. It just doesn't make sense. And from there, we understand that it's because the institutions are buying up the synthetic shares that they have created themselves. Even if you take a look at it here, 370 AMC shareholders out of 4 million total self-reporting holding, and we take a look at in terms of what we are seeing with the data. Already we are seeing the float existing more than what it should be. And when we take a look at the previous data we've seen in the past before, in terms of synthetic shares being existing, in terms of the synthetic shares being created, and just overall data, we've already seen 20 times the float, 30 times the float. And so this is already something that I think is ridiculous in the fact that they want us to believe that we think apes have not only sold 29% of their shares, but also the fact that there isn't any existence of synthetic shares, when we have already seen in the past how all of these exist. But the very fact that this is happening right now, I think is just a good indication is that if they're willing to expose the synthetic shares and the fact that they're willing to buy into the very own synthetic shares that they have created, it shows that they've realized the mistakes they've created for themselves. And they're trying to amend that mistake right now by buying as much as they can. And one of the ways for them to try and minimize their losses is not only by buying up these shares, but more importantly, buying it from the retail is why we've seen the increase in articles, the increase in negative sentiment on AMC is because they're trying to push this narrative. And another thing that they're worried about is because when all of these synthetic shares are not being covered, the fact that they're still existing out there. Remember, AMC is going to go into a time where dividend is going to become more and more likely. And like we talked about, when AMC offers dividends, the short sellers will have to pay first. And for the short sellers who have created billions of synthetics, they will have to pay the dividends for those billions of synthetics. Now, the only way for them to avoid this is if they were to buy up the shares for themselves. So it's why, firstly, you're seeing them suddenly start to buy up as many shares as possible. And secondly, trying to get the retail to sell their shares. Because if it's not retail owning these shares, then they could perhaps go to a kind of a discussion and not offer these dividends out to other institutions. But if retail holds the shares, you know damn well we are going to make them pay for the dividends and even more on top of that. And that's what they're scared about. As always, none of this is ever financial advice, and I'll catch you guys next time.